Hey everybody, Courtney Smith here with our November 29th edition of the Wall Street Winners. Let's dive right in. We had a lot of action this last week, and of course this is jam-packed with action right here. So we had a big drop on Friday triggered by news about a new variant of COVID. That hit things like airline stocks and many other stocks. And as you can see, it really knocked the market down quite a bit. Here's the S&P, which is probably the best index to understand the total market. Excuse me. Anyway, we made a new all-time high early in the week and then broke previous lows on Friday. Stick with me and I'll tell you exactly what's going to happen. So that's a pretty ugly looking chart, but notice that the purple predictor didn't collapse. In other words, the smart money bought the dip on Friday. Let's take a look here at the Dow Jones. So selling pressure in the upper right-hand corner in the red box, you can see selling pressure skyrocketed to a very, very high level. And you can see that buying pressure, the little green line, dropped, but not to real super low levels. Look at the price action just below the red box. You can see a big gap down here. And the Dow has been leading to the downside for really 2 weeks now, as I have outlined to you. Now, my ace helper, Chris, put some vertical red lines and then put a blue arrow up at the top of them. And what that is every time we saw the red line or selling pressure get to the levels that we're at now. And you can see that every single time it was a great buying opportunity. So I think the same thing's going to happen here, that the selling climax is over. Maybe it'll be down again on Monday. We'll see. But basically, that's that. And I'll give you more reasons for believing that this is not the beginning of a bear market, but just a short-term correction in just a second. But a selling climax like this doesn't last long. Let's take a look at the NASDAQ. NASDAQ also made a new all-time high early in the week and then broke the previous lows. But once again, look at the purple predictor. Stable. The smart money's buying, the dumb money's selling. Which group do you want to be in? We're going to say our seasonality indicator is neutral because of that break. And you can see here that the purple line, which has worked great so far this year, it's sideways. So once again, seasonality pretty neutral. And then the last 2 weeks of December, it pops up again. Asset allocation took a dive. In other words, people took money out of the stock market and put it into bonds because they were running away from the risk of the stock market. And oh gosh, our RISKDICATOR also took a dive, once again showing that people are saying, you know what, we just don't really want to take a lot of risk here. This COVID thing, maybe it's going to become another big thing, and airlines are going to have to shut down and countries are going to have to shut down, and we're back to where we were a year ago. That's what the fear of the market is. But the smart money bought the dip, so let's keep that in mind. Global shares, look how hard they were hit. All week long they were under severe pressure. Why? Because they are locking down. Places like Austria have already started to lock down, and other places are also moving in that direction. And so as a result, global shares are being hit much harder than the U.S., where really there's no lockdown yet, right? It may come here as well, but so far not yet. But other countries, particularly some European countries, are being locked down hard. China also locked down hard. And you can see the prices are now at their lows for the last 6 months. Yield curve down a little bit. I think we're going to continue to see it kind of slowly flatten. It's really not a major factor in the market right now, so we can skip it. Bonds spiked up, meaning interest rates went down. Once again, this is that flight to quality we talked about, how the money went from the stock market to the bond market. You can see it very clearly here. people are running for quality. They're running for safety right now. They're not wanting to take risk. But I think that's going to be short-lived. Our bond key factors are all saying that we should see lower interest rates, which means higher bond prices. I think it makes perfect sense. I think we're going to continue to see that for a little while, and then inflationary expectations are going to come back. Right now, people are going like, oh my God, the economy could shut down, so that'll be the end of inflation. But then when not everybody shuts down, then they're going to go back to worrying about inflation, and we're going to see interest rates go back up again. So look for a choppy situation in the interest rate market. Dollar took a dive. So here you can see it down a bit sharply here. I think, once again, this is going to be short-lived as well. The U.S. economy is still one of the better ones in the world, and in the major countries is the best one in the world. In addition, the Fed is the tightest monetary policy of the major economies. So that's all bullish for the dollar. Look for the dollar to rebound here very soon. Gold. If dollar's down, gold has to be up. But first, gold had to take a dive earlier in the week, got a little bit of a rally. But if you look very closely at that rally, it closed near the low of the day. So I thought we might get all bulled up on gold. Nope. Slap down. It's amazingly weak gold, because with all the inflationary expectations out there, with all the inflation out there, gold should be running. It's not. It means there's some other factors that are very, very bearish in this marketplace. Our gold key indicators, 2 out of 3 bearish. The one down at the bottom is very bullish, but still not really all that great of our, you don't want to be bullish when 2 out of 3 of your indicators are bearish. So we're going to stand aside on gold here for a while. I got bulled up, but the market told me no. I always just do what the market tells me to do. Crude oil. Oh my God, look at this thing. So once again, this is COVID fear saying, we had this big rally, which we, made really good money on, which I told you about, which was that because the demand was coming back. Then what I told you over the last several weeks that, supply's increasing, demand is fading. And now the fear is that we're going to see a massive lockdown again, which will cut demand for oil dramatically, just as oil supplies are going up. This follows the release of strategic oil reserves from the U.S. and China. That's not why it collapsed. It collapsed because of the COVID fear, but that was the background that was setting this up, and why I had told you I thought we'd get into the low 70s. We actually got down to the high 60s. So my prediction when we were at 80 was fulfilled much quicker than I anticipated, and actually a bit further than I anticipated. Now, with oil into the high 60s, we could get into the low 60s, but we're not going to go below that, because all of a sudden you're going to see a big increase in the demand, and you're going to start to see the American producers stop producing. So supply is going to start to go down. Demand is going to start to go up, assuming there's no big COVID lockdown, and oil will bottom out probably in the low 60s. So keep an eye out for that. We might even get back long oil stocks in a few weeks. But first we have to let it settle down. Bitcoin, we told you to get out of that a week ago. It's broken to new lows as well. It will probably continue to dribble lower, not collapse, because the smart money's buying Bitcoin, but it is a bear market, and really there's no reason to buy it. So I think we're going to see it continue to drift lower. I'm not short. I'm not recommending getting short, but the price will go down lower. All right, freebies, love having you here, but you know what? You really shouldn't be a freebie. You should be a fully paid up member. So go to WSW 2021 and sign up and become one of the cool kids.